Hello folks, welcome to NEURBOREW TRADER channel. Today I'm now on the Euro USD on the 4 hours time frame using TradingView data as usual. TradingView free data. I'm not using any paid data. I'm not paying anything for them because as I said before, I have the simulator on MT4, so I use it if I want to backtest longer data or if I want to make study on any other data. Of course, you're going to see it in the future videos, but not now. Now I'm being a bit specific on things. So I don't want you to get distracted with the simulator and explains about the Forex simulator because you're going to tell me, are you affiliated with that company? No, I'm not affiliated with anyone yet. I might be later, but for your own benefits, not for mine. I don't really care. I just care about what you learn. I care about what you do with this information. And I care how you are getting that type of information and how it is clear in front of you. So I'm trying to explain it in many different ways so you will be having an ability to understand it in a better way. So today I will be selecting part of the psychological levels, but now it's going to be a bit different on the 4 hours time frame. If you use the 4 hours time frame, of course, the risk a bit is going to increase. And here is the reason why. Because you will be able to find 2 setups a week or 3 setups a week. It depends. And sometimes no setups. You don't have to trade every single setup. So like if you check this area, if you check this area, I'm not selecting on the psychological level. I'm just being now specific. I'm being specific in some areas. Also, I want you to focus on this gap here. This is an important place for me. And also this gap here. Of course, you read the disclaimer. So I have nothing to worry about because these are only for educational purposes. I'm not giving you any signal. Okay, so now if you check this swing high here, and if you check this swing low here, you might tell me that you're going to take a trade from this here. You have also a swing high, but it's going to hit your stop loss. It's going to stop you out. And here is the reason. You might find this one here. You might be able to take it. I'm not promising you, but if you saw it, then that's totally fine. You're going to take it to get in and get out easily. And even from here, but usually you're going to take it from here. But of course, it pushed up and then pushed back down and it broke here and then continued with this candle. So it's going to be an opportunity. But if you waited for this run at this area, you got swiped. You got what swiped. And here is the reason. As long as I have below these highs and these equal highs. So here I'm having also kind of sell stops. So they are going to take them, they are going to make them hit the stop loss and then push back down. So most probably, if people are working with only support and resistance, they are going to tell you this is a support here and this is a support here. Okay, their stop loss are going to be here above. So what I'm looking for in this case, if they, for the people who don't secure their trades, for the people who don't have enough discipline to secure their trades, they are going to get stopped out from here. Here is the reason. We have internal liquidity and we have that external liquidity. So the stop loss got removed. So here is what you can understand. I'm working even when I show you the fib and when I show you the price action pattern. It is internal and external liquidity. We have here internal liquidity and we have here external liquidity and we have here external liquidity. And you're going to tell me why you're choosing this area here, for example, not this one below, but we have here equal lows and we have here equal highs and we have liquidity and we have. The first thing, what the fib is showing me? The fib is showing me minus 0.5. At minus 0.5, what did I tell you? This is my main tip and this is my main focus at this area. Or at 0 or minus 0.5, but I start getting out from the trade consistently or I get out directly. It depends. And if I show you this, it's going to be clear. Here we have that swing low here. We have that type of swing high. We haven't seen after this run any retracement back into 0.618 level. And here it is. Here we go. Here it is. It is super clear. So look at this. Look at this psychological level here that I've already selected. That swing high. Very previous swing high. I haven't selected the most recent swing high. So you can understand that at this place you're going to have something. There is something is going to happen. A reversal, uh, a change in state of delivery. Look at this also. Look at this swing high. These are all considered as institutional level. These are like I can tell you that these are like psychological numbers that the market and the algorithm work based on these numbers, and you can use them for your own benefits. And it has been a long time that I look I was looking at the market and checking them and trying them, and I looked for like almost a full history of trading. I've been in this industry for 3 years. I've been working on smart money uh, from 1.5 year almost, and I've looked into the full history. I used investing.com for a longer history. I went into the 90s, I went into the 80s also, and I have seen that type of movement same repeating over and over again. And from that, I understood that the market is not changing. Nothing is changing. It is the same. It works the same way as I'm explaining to you. And you're going always to find that type of setup. If this, if these setups stopped, it means the market is consolidating, is stagnated. You're not going to have any opportunity. It means there is no liquidity because the market works on run on liquidity and swipe liquidity. And that's it. Nothing more and nothing less. And what we are trying to search for is the liquidity. And there where a big movements are going to happen. When it hits that type of place, a big you don't consider alternating this. That type of movement is a big movement. Of course it is. Of course it is on the 4 hours. Here it is. When it hits here, that swing low. And we have here swing low. So we have here also psychological levels. You can select them both, swing highs and swing lows together. And also I can give you an indicator to make things easier for you. You can type institutional. Institutional. Inst okay, the price action, institution level, or the price level. I don't remember it because I haven't used it for a long time. I'm only using like manually everything. I don't use any indicator. So it is, here it is. Okay, so you have that type, and also you can use the other one. But also this one is clear. But I don't want the price just to make let you show you the difference. Remove one indicator and oh, oh, oh. For real, I don't like really prepare for my videos or think about anything. I just share my knowledge with you. I share what I see. I share what you need and look at the difference. That's the price action. And this is the preferable one for me. I use the price action one, and the reason is look at this level, look at this level, and What I want to arrive with you, where I want to arrive with you, it's going to give you a clearer setup. Let's say I have selected this break of swing high before and then pushed out and back down. For now, in this case, I'm not going to put it on the body. I'm not going to put it on the shadow, the point of the fib, the first point, and the second point also. The same. I'm going to put them where on the institutional levels. Like it should pass the halfway of like an area here, for example. Let's consider this is an area here. Okay. It should, and we have here quarter way, halfway, and three-quarter way, and like the distance I'm telling you, and here the full distance. So it passed the halfway of it, and in this case, I am able to get my trade like to put the point of the fib at this institutional level. This is how I consider them. And then push back up, one TP. You can close partials if you like, and the euro might continue into zero point 0.5. Trade is secured and everything is good. Also, I want you to focus on this here, this gap. Do you think this gap is done after it got filled? Of course not. It rolls haven't done yet. So what I wait for when it push back up and fill it. Of course, I will be expecting a reversal. But then, here's what I want you to check. Of course, I have here a break of swing low, a retracement back up, filled the gap, and then push back down. And then, in this case, I will be waiting for a run on liquidity on the gap because we have here a lot of liquidity, and this is what caused that gap. And what caused the gap also, like the sell stops. Sell stops, like we have here a lot of orders, and in this case, the orders let the candle push down, causing the gap without having any real volume here. So the main gap was from here into the opening price, into the opening price here. Okay, this was before it got filled, but we haven't finished it. After a run on liquidity, and this is more important than the other one. This most people know this, but this one here, after it broke up and it swapped the liquidity here and run on the liquidity, I will wait for a pullback down, and then from this case, I will be going with the movement back up. And here is a small reason also. Remove this one. Okay. We have here this level. We have here this swing high. Okay. We have the fib, and we have this institutional level past its halfway. Boom, 0.618, stop loss down, and push back up. See, I am explaining for you different ways and different models to find an opportunity. The fib is making things easy, but I want you to understand what is happening inside the fib. I want you to understand what is the internal liquidity that we are looking for. So let's say I don't have a fib, but I have this gap. So I know that after pushing up, you're going to tell me this one here, this one is not going to be inside my kill zone. So after that, I will be waiting or going down with different opportunity. And I have here a break of swing low. So in this case, I have here internal liquidity and then into the external here, boom, got swap and then push back for the sell opportunity. And same thing for this area. We have break of swing high here. So I'm bullish now. I have the fair value gap here. Not fair value, sorry, the gap. This is not a fair value gap. Don't get confused. Then pushed back up. And also, you have here a lot of buy side, like a lot of buy liquidity. So that's what makes the market push up. My expectation, anytime, I don't know when, anytime it arrive into this place, it will get filled and then push back up. And after that, when it gets filled, push back up. I'm not telling you that it's going to push the full range. I'm not telling you this. I'm not promising you. You should always secure your trade. And of course, when I have a swing high broken here, it's going to be so easy to take it. And after that, we're going to see a bearish move on the euro when it arrives here. And after getting filled, then we wait for a run on liquidity, retracement back up, breaking of this short-term low, and TP into the external liquidity, first TP, and you can keep your trade open into this area here, let's say, into this order block here, that you will be able to close it fully profitable. So hopefully you found this insightful for today, and I'll see you in my next video very soon. Take care.